Hello, and thanks for watching Proactive. I'm joined by Sandy Chim, the CEO of Century Global Commodities Corp. Sandy, always a pleasure to speak to you.
Same here too, Stephen. Good to see you again.
So, Sandy, could you tell us where Joyce Lake is located?
Joyce Lake is located in a very busy district in terms of iron ore mining and operation over the last 70, 80 years. It is in the Labrador Trough of eastern Canada, straddling across the borders of Quebec and Labrador. It is actually the iron ore center of Canada. Most of the iron ore production comes from this region in Canada. And actually in Canada, we sponsored the rebuild after the Second World War in Europe or in the US, supplying huge amount of iron ore. The region started in 1954. It was discovered actually maybe about a century ago that this actually iron ore belt with basic banded iron formation was discovered at that time. And I remember reading some history, some $400 million was actually raised and built the mine and the rail. The rail was built on horseback because there's no road access in those days, and it's still operating today for the last 70 years. And we are actually in this busy area with a very good asset. This area is where Rio Tinto's IOC Carol Lake is, and ArcelorMittal's Mount Wright is as well. And we're just a little bit up north where IOC started about 70 years ago. It is an area close by a town called Shefferville, just 20 clicks from the town, where it was a mining town with infrastructure, rail, everything connected. So it's a very good address, very good operation, very good area.
What's the history of Joyce Lake, and how long has Century been operating in the area?
Very good question. Actually, we've been in the area for the last 15 years, Stephen. We actually seeded Consolidated Thompson. We actually seeded Bloom Lake. Actually, if you go on Cedar, you can still see my signature there, that we have a joint venture on Bloom Lake. And we also seeded actually Champion. So a full circle of Bloom Lake, Consolidated, Thompson, Champion. Now Champion takes over Bloom Lake. So we have actually a history and relationship with the major successful operators in the area. And on top, actually, our Joyce Lake project, where we are in, actually was in a joint venture property with Champion. And Champion sold the interest back to us, took back a royalty. So Champion still has a royalty interest in Joyce Lake. And we've been working there since about 2008. We started prospecting in the area. We discovered Joyce Lake, which is a DSO, very high grade, 62% kind of iron ore grade, naturally occurrence, which can be just dug up and shipped. And therefore, people call it DSO, direct shipping, or product. So 2014, we discovered, had a resource, and we won an award because for the last 30, 40 years, nobody discovered any DSO over the same period. We're the first one, and that doesn't seem to the next one coming along anytime soon. We don't see any. So we've got a lot of history, and we took the project from prospecting 15 years ago, discovery of a deposit, did a PEA, preliminary economic assessment, and did a feasibility 2015, and the market collapsed on us. Now the market is recovering and coming back very strongly. Now we're putting back the project. We started a couple of years ago with restarting the environmental assessment file and updating the feasibility study, which actually we have published just earlier on with the results, and the final report will come in about mid-December.
So how's the company doing with respect to that environmental assessment, Sandy?
Very good question, because environmental assessment is always a challenging subject, and particularly, given the decarbonization movement globally. So we're faced with some very stringent, I think it's fair to be that, very strict environmental rules. So it took a lot of time to work with provincial government, who has a say in our environmental assessment by law. And we have to also deal with the federal government as well. On the federal government side, we have a file continuing for over the last 10 years. We got the guidelines from them, started working right away 10 years ago with baseline, other studies done, and because of the hiatus, we put in the back burner for a few years until we reactivated the file a couple of years ago. Working hard, we started actually an environmental impacts assessment for review. Conformity report came back from the federal government with a number of issues to address last year. It took a year. We have actually addressed those issues and submitted actually an updated EIS environmental impact statement October 1st. And the federal government, the agency took a few weeks to review and came back actually just a few days ago with the confirmation that they think the project is conformed to the guidelines, and therefore the federal government is going to proceed with also the technical review involving a dozen of departments in the federal organization looking at the project. But one very important actually change during this last 10 years is actually a new environmental legislation came into effect, and it came into effect actually August. It was passed by the Parliament 10 years ago and came into effect August. So our environmental assessment based on the old legislation was coming to an end, but the federal government was cooperating enough, seeing so much investment we've made huge progress in terms of the process, and therefore they gave us an extension to 2025 so that we can run the environmental process under the previous legislative regime until 2025.
You mentioned the feasibility study update, Sandy. Could you tell us the highlights of the results of that study?
Yeah, I actually think it's very exciting because this project has a huge improvement in the new study. It is about 300% higher in value, and even given, I'm sure, Stephen, you may have seen so many mining companies that the kind of mining inflation, which is more aggressive, much higher than the general economic inflation these days, very challenging. To build any project is very tough because we're talking about over the last 7 years, something going from 30% of equipment or cost increase to even a couple of 100% point of increase. Plus the fuel cost has gone through the roof, as we know, given the economic global geopolitical events. So we are dealing with that, but we deliver regardless of that. We deliver a 300% better project with $185 million of net present value at 8% after tax, and a plus slightly over 20% IRR after tax as well, and a payback period of 3.5 years.
So how does the newly updated feasibility study compare with the one you did in 2015 in terms of the top line KPI metrics you outlined?
Yeah, that was the toughest job that we wanted to actually improve from the 2015 feasibility study, because it had $61 million of net present value. Of course, we're now delivering 300% better in terms of value to the company, to our shareholders, is because, first of all, I think the general help comes from iron ore market recovery. The iron ore price is recovered to where it's $125, and $125 is the average year to date this year, and the average also 3-4 years ago. So the entire 4-year average iron ore prices come to $125. So that helps us with dealing with actually producing a better return. But in the meantime, as I mentioned about the mining inflation, is huge. I'm sure that everybody doing a feasibility study or building a mine is facing that. And as I mentioned, about 30% over the last 7 years, inflation, the cost of equipment have gone up to a couple of 100%, a huge price cost increase. So the iron ore price is eaten up by a lot by the cost inflation. So we sat down and looked at the project, and we had to do some innovative sort of creativity there. What we've done actually was we focused on addressing the transportation cost component of the project, which is about 60% of FOB, steel cost, about 70+% when landed to a final destination market, most likely China. So we focus on looking at that, and to boil it down, actually that problem, the construction cost challenge comes from in our operation, because bulk commodity is all about moving very cheap material, just $200 a ton at the most, around long distance constantly every minute of the day. So transportation cost is very important. So if we focus on reducing that, we would help and produce a much better report, a much better return. So we have done that by zeroing in and focusing and saving transportation costs in an innovative way.
Well, can you share what this major innovation is that contributes so much to making the project so attractive, Sandy?
Yeah, actually something, some good solution always are the simplest. what it boils down to is actually we ship all year round. Because in the area, in the typical operation in our area, either you ship seasonally as in the past, or you can dry your product and ship all year round. But drying everything is very costly, so it depends on scale and also the consistency of the product. When project like ours happening, in the area, drying to be able to ship all year round has never been a workable solution. And the single most important problem actually is moisture, because the ore naturally, because it's free digging and then ship it, there's no processing, so the moisture is a little bit high. In the winter, if you ship over 3% of moisture or over about 3% threshold, it gets frozen. So the challenge is how to bring the ore down from, like in our case, about 6% to 3%, and to dry it, the entire stock, very costly. It's more than actual transportation costs you save. So what we've come up with is just one simple solution of drying 1/3 of the product, drying partially the moisture content, and for part of the year. So if we dry only in the summer, dry only 1/3 of the lump product from only 4%, because it's drier. The product itself is already drier by 1 or 2%. So it's a 1 or 2% solution to dry it, and dry only 1/3 of it, and to dry only in the summer. That would enable us to ship throughout the year in the winter. And saving is huge, because the transportation cost problem came from the fact that when you buy a ticket, winter or summer, if you don't go on a train, you still have to pay for the ticket. So in the past, we paid for the ticket, we never get to use the train. So now we can actually pay the ticket and use the train, so that we can actually drop the cost substantially down, as demonstrated in this feasibility study, and it produces a 300% better return than the past, and hopefully can set an example for the region to improve the kind of operation that we're having.
Well, it sounds ingenious, Sandy. A door why you didn't think of it before. Thank you very much for updating us on that project, Sandy, and I hope you'll keep us posted on any progress.
Absolutely, Stephen. Thank you for your time.
Sandy Chim is the CEO of Century Global Commodities.